Shiba Inu is standing at a dangerous crossroads today as the digital landscape shifts beneath our feet. While the community dreams of a massive breakout, the cold reality of on-chain data tells a far more complex story of caution and stalling momentum. Are the whales preparing for a silent exit, or is this the ultimate shakeout before the moon? Let's dive deep into the numbers that matter right now. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The Shiba Inu ecosystem has evolved far beyond its meme origins, now operating as a multi-layered, decentralized finance powerhouse. However, as of January 20th, 2026, the project is facing a significant test of investor resolve. The primary focus today is on the shifting balance of on-chain flows, which track the movement of tokens between private wallets and centralized exchanges. According to reports, these dynamics are currently in a critical phase where reduced exchange liquidity is clashing with a broader sense of market hesitation. This context is vital because exchange flows often serve as a leading indicator for price volatility. When tokens move onto exchanges, it typically signals a desire to sell, whereas outflows suggest long-term holding behavior. To understand the gravity of the current situation, one must look at the historical context of the market cycles. In previous years, massive price rallies were almost always preceded by a significant drain in exchange reserves. When tokens are moved to cold storage, it reduces the immediate sellable supply, creating a supply shock that can amplify price movements when demand returns. Today, however, we are seeing the opposite trend begin to emerge, which is why the on-chain flow data has become the most watched metric in the entire ecosystem. The main development shaking the Shiba Inu community today is the sudden stall in recovery attempts following a brief period of optimism. As per on-chain data, exchange net flows have turned positive over the last 48 hours, with over 52 billion tokens moving back onto trading platforms. This reversal comes after a promising start to the month, where negative net flows suggested heavy accumulation. This influx of tokens onto exchanges is creating a supply wall that is preventing the price from breaking through key resistance levels. Furthermore, futures outflows have reached a staggering 1.2 trillion tokens in a single 24-hour window, indicating that leveraged traders are closing their positions and stepping to the sidelines as uncertainty grows. This massive exit from the futures market is particularly telling. It suggests that the smart money and high-frequency traders are no longer willing to bet on a short-term recovery. Instead, they are opting for the safety of stablecoins or other assets, leaving the spot market to deal with the increased supply. The sheer volume of these outflows, over 1 trillion tokens, is a clear signal that the market's risk appetite has diminished significantly in the face of stalling price action. The market's response to these shifting flows has been one of immediate caution. Shiba Inu is currently trading at 785 units, representing a decline of approximately 3.44% over the last day. While the token attempted to hold the 813 unit level earlier in the session, the lack of buying pressure from retail investors has left the price vulnerable to further downside. Trading volume remains at around $110 million, but much of this activity is concentrated on the sell side. According to market observers, the inability to maintain the 800-unit psychological barrier has triggered a wave of stop-loss orders, further complicating the recovery efforts. The total market capitalization for Shiba Inu now sits at approximately $4.6 billion, reflecting the broader cooling sentiment across the meme coin sector. This decline is not happening in a vacuum. Other major digital assets are also experiencing a period of consolidation. But Shiba Inu's sensitivity to on-chain flows makes its reaction more pronounced. The depth of the order books on major exchanges shows that there is a significant lack of buy walls below the current price, meaning that any further increase in exchange deposits could lead to a rapid slide toward the next major support zone. Looking deeper into the on-chain evidence, the data reveals a tug-of-war between different classes of holders. According to data, whale transactions have actually jumped by 111% recently, yet this hasn't translated into a price surge. This suggests that while large players are active, they are likely rebalancing their portfolios rather than aggressively buying. On the burn front, there has been a massive spike in the burn rate, which surged by over 1,344% in the last 24 hours. Approximately 28.8 million tokens were permanently removed from circulation. While this deflationary pressure is a long-term positive, it is currently being overshadowed by the massive exchange inflows. On-chain flows also show that the top 100 wallets still control about 57% of the total supply, meaning that any sudden move by these mega whales could dictate the next major price swing. Interestingly, data shows that several dormant wallets, those that haven't moved tokens in over 2 years, have recently become active. While some of these wallets are moving tokens to decentralized exchanges for liquidity provision, others are sending small test transactions to centralized exchanges, a move that often precedes a larger liquidation. This awakening of old supply adds another layer of complexity to the current on-chain landscape. Expert commentary suggests that Shiba Inu is currently trapped in a distribution phase. The bearish structure remains intact because the token has failed to produce a higher high on the daily charts. The positive exchange net flow is particularly concerning because it suggests that the smart money might be preparing for a deeper correction. However, some argue that the high volume of futures outflows could actually be a sign of a volatility squeeze. When enough traders exit their positions, the market becomes thin, meaning a small amount of buying pressure could trigger a rapid short squeeze. The consensus is that until the net flow returns to negative territory, meaning more tokens are leaving exchanges than entering, the path of least resistance remains downward. Furthermore, the relationship between the network's activity and the token's price is being closely scrutinized. While the technology continues to process millions of transactions, the burn-to-volume ratio hasn't yet reached the levels needed to significantly impact the circulating supply in the short term. This means that for now, the price remains at the mercy of exchange-based supply and demand dynamics, rather than the ecosystem's internal utility. Looking ahead, the short-term forecast for the next month remains clouded by the current on-chain imbalances. If the selling pressure continues, analysts predict Shiba Inu could test the support level at 750 units. Conversely, if the community can absorb the current exchange inflows, a relief rally back to 850 units is possible. In the long term, over the next 3 years, the outlook is more optimistic, but depends heavily on the successful adoption of the ecosystem's technology. If the project can transition from a meme-based asset to a functional utility token with significant burn mechanisms, some forecasts suggest a return to the 2,000-unit range. However, this would require a massive shift in global liquidity and a sustained decrease in exchange-held supply, which currently remains at around 82 trillion tokens. The 3-year horizon also factors in the potential for institutional interest. While this is primarily a retail-driven asset, the development of regulated investment vehicles and the increasing maturity of the network could eventually attract smaller institutional players looking for high-exposure opportunities. However, this remains a speculative outcome that depends on the project's ability to maintain its community-led momentum while building professional-grade infrastructure. Investors must remain aware of the significant risks associated with Shiba Inu at this juncture. The primary risk is the high concentration of tokens in a few large wallets. If a single major whale decides to liquidate, it could cause a flash crash that wipes out months of gains. Additionally, the neutral to bearish sentiment in the broader crypto market could drag Shiba Inu lower, regardless of its individual on-chain metrics. There is also the risk of burn fatigue, where the community becomes desensitized to massive burn percentages that don't immediately impact the price. While the project has strong fundamentals for its category, it is still highly speculative and subject to extreme volatility that can be triggered by minor shifts in exchange reserves. Another often overlooked risk is the regulatory environment. As governments around the world tighten their grip on decentralized finance and meme-based assets, the project could face headwinds that limit its accessibility on major exchanges. This regulatory uncertainty, combined with the current on-chain outflows, creates a perfect storm of caution that every investor must navigate with a clear head and a well-defined exit strategy. The story of Shiba Inu is far from over, but the current data demands our full attention. As we watch the on-chain flows and wait for the next move from the whales, remember that patience is often the greatest asset in the world of crypto. Will the Shib army hold the line, or is a deeper correction inevitable? Stay tuned as we continue to track every burn, every whale, and every heartbeat of this ecosystem. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.